Home Depot Stock, ticker symbol HD. This stock is up 5% year to date and has gone up and down quite a bit so far. Most recently it increased roughly 17%. On the 15th of August, HD represented quarter results where they beat on EPS and revenue. But analysts think they will miss on their next target. So let's see what happened during these earnings. Most people love HD stock because of the dividend growth, and I understand why, with dividend yield at 2.5% and dividend compound annual growth rate at almost 16%. So could this be the perfect moment to buy HD stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Home Depot do? Home Depot engaged in the sale of building materials and home improvement products. Its products include building materials, home improvement products, lawn and garden products, and decor products. It offers home improvement installation services and tool and equipment rental. If we dive in the most recent earnings report, we see that Home Depot reported sales of $42.9 billion, a decrease of 2% year over year, which is in line with expectations, to be honest. Comparable sales in the US decreased 2% as well. It is of course a bit disappointing to see Home Depot decreasing in revenue and comparable sales, but in the end it is what we all have been anticipating on. Net earnings were reported at $4.7 billion or $4.65 per share. For the 2023 full year guidance, Home Depot expects to see a 2 to 5% decline in sales and comparable sales compared to 2022. Operating margin to be in the range of 14 to 14.3% and the earnings per share to decline between 7 and 13% compared to 2022. So this was the bad news. But there were also some good things, like the repurchases program. The board also authorized a new 15 billion share repurchase program effective August 15, 2023, replacing its previous authorization. Another interesting thing, and in my opinion a positive thing, is that sales data is recovering. To me, these three numbers are very important, and yes, they are declining. But if you compare the 3-month ended ratios to the 6-month ended ratios, we see slightly better numbers right now. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Home Depot is a $334 billion market cap company. PE ratio is at 20, which could indicate that they are at a fair valuation right now. Later in this video I will show you my 3 price targets for HD stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 154 billion and in this graph we see that revenue went up nice and steady. The lockdown periods had a big impact on the revenue growth and right now things are coming down just a bit. It is something to keep your eye on. Over a longer period of time, margins are increasing, which is looking really good. Most recently it is coming down just a little bit, but overall this looks really good to me. EPS is growing really nice and steady. To me this looks pretty good. It is following the same pattern as the revenue growth. Analysts expect mid to high single digit growth in the EPS. Again, this is also looking really good to me. For the revenue it is pretty similar, but with slightly lower numbers. It is expected to see low single-digit growth in the coming years, which makes of course a lot of sense since they are massive already. Return on assets is sitting at 17%, which is a great number. Return on equity looks really interesting. And the most important number, return on invested capital, is sitting at 44%, which is an insane number. It is slightly lower versus the 5-year average, which of course makes a lot of sense. But still, 44% is an insane number, really impressive. Current ratio is at 1.3, which is looking pretty good. It is going up and down quite a bit, but it's always in a healthy range. Right now, HD has 49 billion in debt. I prefer companies that can pay on at least a big chunk of their total debt with the total cash position. Home Depot has 1.26 billion in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like, obviously. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, even at a steady and consistent pace. During the lockdown periods there were two massive spikes. Right now it is returning to previous growth levels. Shares outstanding are decreasing, which is a good thing. When shares outstanding are decreasing, it increases your ownership in a company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.51%, which is a great number. Annual payout is at $8.36 and payout ratio is at 24%. I prefer 50% or lower, so right now they have 76% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 16%, which is an insane number, and one of the reasons why I love this stock so much. On top of that, they increased the dividends for 13 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that Home Depot really likes to increase the dividends, which is very nice. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio was kinda steady, hovering around 50%, which is a decent number for this company. But payout ratio took a massive dive to 25%, which is not a bad thing of course. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Home Depot stock with the overall market, in this case the S&P 500. Next to that I added their main competitor, which is Lowe's. On the 5-year chart we see that HD beats the S&P 500 big time with 92% return including dividends. Lowe's also did beat the S&P 500. In fact, Lowe's had the highest return with almost 150%, which is very impressive. On the 1-year chart it looks pretty different, with the S&P 500 returning 4% including dividends versus HD returning 4.5% including dividends. Lowe's has again the highest return here. On the 6-month chart it is the S&P 500 with the highest return, 8.5% in total, beating the others in this list. On the 1-month chart it is again the S&P 500 with the highest return, but Lowe's is not far behind. Home Depot is struggling a bit with 1% return. So bottom line, HD stock beats the S&P 500 big time in the long run, and most recently it is looking pretty interesting with lower returns versus the S&P 500 and Lowe's. So could this be the perfect time to buy HD stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2%, 3.5% and 5%, based on historical performance, their own outlook, but also because of the analysts. For the profit margin I'm filling in 10, 11 and 12%, and for the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio I'm putting in 19, 20 and 21. In my opinion this company has in some areas a moat, and they have this really high return on invested capital. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now HD stock is at $332. I hit analyze and we see a lot of red numbers. We have a low price target of $178 to $198, which is a big drop from the current stock price. We have a mid price target of $227 to $250, which is still a big drop. And we have a high price target of $288 to $315. To me, the high price target is the most justified here. indicating that this stock is still overvalued right now. My final conclusion on this stock is that I love the business. It is this massive company that is capable of growing their dividends at a high rate. However, revenue and free cash flow are slowing down a bit. And yes, this is a short-term problem and thus concerns a lot of people. However, in my opinion, they will do fine in the long run. Margins are increasing, which is something that I really like, and they are buying back shares at a high rate as well. For now, I'm waiting for the stock price to drop to roughly $270 before adding new shares to my portfolio. In the meantime, I will keep collecting the dividends and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.